We came into the week after the long weekend with a negative start following the non-farm payrolls on Friday in the United States. As you can see from the chart on screen, the FTSE has over the past week given up the majority of its gains for the year, going back to pretty much flat for 2012 as we stand. The main reason, besides the US slowdown, is that Spain has been a very weak feature across the equity indices. As you can see on this chart, it plots the differences between the IBEX, which is in yellow, the FTSE in white, and the S&P 500 in green. The IBEX has clearly underperformed and has been a very weak constituent since really 2010 when it broke away from the other indices. Part of the reason for this has been due to Spanish bond yields, which for the week touched back to the 6% level. On screen you can see the comparison versus the Italian. And really in the last couple of months we've started to see a prolonged move higher in those yields. Interestingly, this week Apple, which broke through the $600 billion market capitalization mark, is actually larger than the three markets of Portugal, Spain and Greece. There's roughly 500 listed companies between the three indices, and Apple is now actually larger than all 500. This has been a tightening or obvious increase in Apple's market cap, but Greece, Spain and Portugal were actually 11 times larger than Apple back in 2007, so it's been a continued move. Just moving on to other news on equities in the week. Nokia posted a profit warning on Wednesday. They were down about 20% in intraday trading. They've continued to move lower since. This has been a continuing trend really since the dominance of Apple and the iPhone has taken over. Back in 2007 they were trading at just below 30 euros per share, and as it stands at the moment they're just above 3 euros, so it has been a continued move lower. We also moved into the US reporting season this week, with Alcoa being the first major to report, and the S&P. They actually beat expectations, as did Google last night. You can see that the sharp move higher in Alcoa shares on in overnight basis. They reported after the close. So we've got JP Morgan today reporting this afternoon. We've also got Wells Fargo, and this is really when the reporting season starts. So that's predominantly, aside from the Eurozone issues, I imagine what's going to be driving markets going forward over the next couple of weeks. And just to finish up, just back on the domestic scene, Royal Dutch Shell yesterday, actually on Thursday, sold off about 4% on an intraday basis. This was due to worries of an oil leak. There was a sheen found on a 10-mile area between two of their rigs in the Gulf of Mexico, and obviously following on from BP issues with the Macondo well, investors somewhat ran for protection and were selling. Shell handled this rather well, and they've sent a exploration and also clean-up ship to the site very rapidly, and also had a press release yesterday afternoon. And in actual fact, they pretty much recovered the majority of that sharp 4% downtrend. So as I say, looking forward, we've got the US reporting season, and just continuing to look at the Eurozone crisis, and we will do this again next week.